What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Alibaba, and more specifically, we're going to be talking about Charlie Munger and his comments on Alibaba. Recently, he came out and made some very interesting remarks about Alibaba, and I've gotten a few comments on a couple of my videos. So what I wanted to do in this video is I wanted to go over what he said, and then I wanted to get into my opinion around all of it, because there's a lot of things that you need to keep in mind when you're looking at a super investor, a large investor like Charlie Munger, like Warren Buffett, like Ray Dalio. Any of those investors, when they're putting on a position, there's a lot of key variables that you need to consider. Like, when are they putting on the position and when are they selling out of the position? Those are going to be very important, and they're going to vary from person to person, because if you hear about one of these investors buying into some sort of stock, oftentimes it's 3+ months after they actually started building their position. So you need to keep all of that in mind when you're looking at a lot of these large investors and their portfolios. So we're going to go over all of that in this video, and then we're going to go over my opinion on Alibaba, where it's headed in the future. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. As I mentioned in the intro, Alibaba has been getting destroyed over the last month to 2 months, and we can see here in the last day it traded down around 0.25% over the last 5 days, basically still sideways, down about 0.5%. Over the last month is where it gets bad. We see that it's down 15.59%, and over the last 6 months we can see that it's actually slightly up 1.5%. But what's very interesting is when you come out here to around January 26th, which is the high just a couple months ago, and we go from there down to where we're at right now, we can see that the stock is down over 25%. During the Daily Journal's recent investor meeting, Charlie Munger had a couple of very interesting comments. So Charlie Munger said he remains optimistic about China's economy, but conceded the Daily Journal's investment in Alibaba was one of the worst mistakes he ever made. I never stopped to think Alibaba was still a retailer. It's going to be a competitive business. As I mentioned in the intro, one of the most important things to keep in mind is when someone is adding and creating their position and the price that they are adding at. So here, I love this website, Stock Circle. They have the layout of basically when these super investors are adding positions on in these companies. So we can see here, Charlie Munger for Alibaba. He originally started purchasing shares in Q1 of 2021, and we can see that he added 165,000 shares at an average price of $245.62. The next quarter, he did not buy at all. He did not buy any Alibaba. Then in the third quarter of 2021, you can see that he added 137,000 shares of Alibaba, and this was at an average price of around $181.93. And then in Q4 of 2021, he added an additional 300,000 shares of Alibaba. Over this quarter, the price traded at an average of $145.63. So when we look at just those three buying positions, we get an average cost of around $181. So it's important to keep in mind that $181, that is the average of these 3 quarters. So if he bought at the high of each quarter or the low of each quarter, that is going to affect that number, right? If he bought at the high, we're going to see that number slightly creep up. If he bought at the low, then we'll see that number slightly creep down. But somewhere around probably $175 to $200 is where Charlie Munger's cost basis is at. What's also important to keep in mind is he actually sold off half of his position in Q1 of 2022. So we can see he sold out 302,000 shares. That just happens to be, if you add this 137,000 and this 165, that comes out to 302,000. So he sold off these first 2 positions, and basically what that allows him to do is write off these losses against his taxes in 2022. So he still is holding on this lower cost basis position, and we could see again the average closing price over that quarter was around $145. So right now we can kind of get the feel that, he is down around probably 40%. The important takeaway from all of this is that the price that you buy a company at is important. So when you're buying a stock, you are buying the underlying company, and that is what you need to keep in mind. So when Charlie Munger was adding a little over, a year and a half ago, he was adding at a price point that was higher than, where the market really valued things. And a lot of that was not because of anything Charlie did wrong fundamentally. At that time, the only thing really going on was China was regulating some of their tech industry, and it looked like it was going to be a short-term thing, that they were going to regulate the tech industry, throw a couple couple fines against Alibaba and some other big players, and then back off. But what happened since then is that the US stepped in and basically said, hey, we are going to require audits of these Chinese companies, or we're going to delist the companies. That sent the stock down and Chinese stocks down in an incredible fashion over a very short period of time. And then obviously we saw China completely shut down its economy over the last year or so, and we've seen interest rates rise. We've seen a lot of different issues that Charlie Munger probably didn't foresee coming about, and all of that has sent the stock down lower and lower. And obviously he's taken a little bit of advantage of that, but he also built out his position a little bit too fast, too early. And that is one fundamental thing to take away from this, is dollar cost averaging into a company over a longer period of time is going to work out better for you. Whether it's a single company or even an index fund, it's always better to distribute your positions over a longer period of time, and that'll help with your cost basis. So Charlie Munger did make a couple comments about Alibaba just being another retailer, and I want to get into that here in a second. But before we do, I wanted to point at a couple comments from some very important people when it comes to the stock market. So here we have Douglas Peterson. He's the president of S&P Global, which basically they have a large effect on the stock market in general because they are going in and auditing companies. S&P Global is actually responsible for the S&P 500 and actually have ownership rights. So any company who basically claims that they have an S&P 500 fund, they have to pay a small fee to S&P Global. You can look more into basically their business if you like. And then we have Morgan Stanley. Everyone knows who Morgan Stanley is. These are two people who basically determine where hedge funds and where a lot of the money in the stock market is going. So these comments hold a lot of weight. So from president of S&P Global, we have there's pent-up spending, there's pent-up demand. So we think China will see a very strong growth, especially as you get later in the year. So again, what I think he's kind of alluding to here as later in the year is potentially we could see, interest rates actually start to come down on the back half of this year. If the Fed runs into a situation where maybe unemployment starts shooting up a little bit more than they would like, then I think it's definitely a possibility, later half of this year, if not early next year, that interest rates could potentially actually drop. And then here we have a comment from Morgan Stanley's Laura Wang. We believe the market is underappreciating the far-reaching ramifications of China's reopening and the possibility that a robust cyclical recovery can occur. So again, another comment basically saying that, China's reopening could be similar to the US, and we could see the stock market and a lot of these Chinese companies actually, basically blow up in stock price in a very quick way over a very short amount of time. So in terms of Alibaba being just another retailer, I'd obviously disagree a little bit with that comment. I mean, when you think of retail type of companies, you think of like a Macy's or a Bed Bath & Beyond, someone that has a very, physical storefront type location. But when you think of Alibaba, it's more comparable again to something like Amazon. And what we've seen from Amazon and Alibaba over the last, year or so is that their margins have been hurt in a major way. Their revenue, we've seen the revenue, continue to climb for these companies and continue to perform relatively well. They haven't had the growth year over year numbers that you'd like to see, but they've still, held up relatively well in terms of revenue, but their margins is where they've been hurt. So we could see here that in Q3 of 2023, Baba has actually improved its margins by 21% from a year prior. So this is already a big sign. This is basically showing that Alibaba, recognizes that this is an issue and that they need to address it and continue to improve their margins over time to kind of get back on track. And with that margin improvement, we've seen free cash flow jump by approximately 15%. We have also seen Alibaba continue to buy back portions of their company. So we have seen them buy back $3.5 billion in Q3 of 2023. And then they also have focused on improving their net cash position. So we have seen that improve to $55 billion. And then the final thing to note and keep in mind is that Alibaba is still authorized to repurchase $21 billion worth of shares. So as I mentioned, what these large retailers really need to focus on is margin. So we could see here that Alibaba was trading and had an EPS, a trailing 12-month EPS of around $8 just a year to 2 years ago. And then it fell off in a major way on the back half of 2021 into 2022. We could see that it fell all the way down to 92 cents. And the last couple quarters they have had, actually over the last year, they've had a couple quarters that have been actually negative EPS. So overall, you'd never like to see that, but it looks like we could be, starting an uptrend. We could see a small bounce and potentially continue this uptrend. The big thing that will help with all of that is, again, China reopening its economy. The zero pandemic policy that they've had in place for so long has really, impacted the overall economy over the last year. And that's what they really need to get away from and really, reopen everything back up. And again, let some of that pent up demand and spending out back into the economy and get get back to overall GDP growth. Overall, I do really like Charlie Munger and his investing style. I think that for Alibaba, he just got put into a bad position from the very start. He added very heavy early on, and I think that kind of put him in a bad spot. And, since then, that's obviously hurt him. And it hurts a little bit of your ego when you hit something, that wrong and just miss time, adding to your position, because you could be in a very different situation. If he bought, just a few months ago and around that $60 price range, you would see, that he would be up around 20 to 30%. And overall, he'd be, talking a little bit differently, I think, about Alibaba. So you have to keep in mind that timing is important when it comes to investors. So take that with a grain of salt, because I do own Alibaba. I like Alibaba for the long term. I am currently down on my position a little bit, but, still, I like the company for the long term. I think that they're getting back to growth, and they've kind of seen that with their EPS and with their earnings call. I think that we'll see that over the next year or so. And like, we saw from those comments, I think the back half of this year could be very important and very crucial for a lot of companies. I think if we start to see the Fed lower rates, I think that'll have a big impact on a lot of these stock prices. So overall, I hope you enjoyed the video. Keep in mind, as I always say, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research. So with that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.